There comes a point in every investor's life when the noise of the market becomes overwhelming, when predictions, trends, charts, and expert opinions collide into a confusing storm. And in those moments, one name always rises above the noise: Warren Buffett. His consistency, his patience, his clarity, and most importantly, his ability to turn simple principles into extraordinary wealth. In today's episode, we explore 7 secrets to investing like Warren Buffett, a book that pulls back the curtain on the mindset and philosophy of the world's most admired investor. This is not a quick rich formula, nor is it a technical manual. It is a journey into a way of thinking, a disciplined, calm, rational approach to wealth that has shaped generations of investors. So, take a breath, settle in. Let us walk together into the world of Buffett. Not the legend, but the thinker behind the legend. The book begins with a simple truth. Warren Buffett did not become the world's greatest investor by chasing trends or predicting markets. He achieved it by mastering the art of understanding businesses. Mary Buffett introduces this by reflecting on her years observing Warren up close, watching how he read annual reports with the patience of a monk, how he waited for the right opportunities with the calmness of a fisherman, and how he made decisions rooted not in excitement, but in logic. The authors highlight Buffett's relentless focus on compounding. They describe compounding not as math, but as a living force, a quiet, invisible engine that grows wealth slowly at first, then explosively. Buffett, even at a young age, understood that money is a soldier. Once deployed wisely, it works tirelessly, multiplying itself year after year. The authors recount how Buffett invested in pinball machines at age 17, reinvested the profits, and built a small empire, not because the machines were special, but because he grasped the simple philosophy of never interrupt compounding unnecessarily. From here, the book transitions into Buffett's most important principle: buying businesses, not stocks. The authors illustrate this through one of Buffett's favorite metaphors. If you were buying a farm or factory, you would study the soil, the production, the management, the long-term profit potential, not the daily price fluctuations. Buffett sees stocks the same way. He studies a company's ability to produce consistent earnings, its competitive advantages, the quality of its managers, and the durability of its products. The authors bring this to life with stories like Coca-Cola, a company Buffett studied for years before investing. He wasn't interested in the stock price. He was interested in how Coke had created a product people consumed every day all over the world, in good times and bad. To Buffett, that consistency was priceless. Another secret the book explains is Buffett's deep devotion to understanding competitive advantage, or what he famously calls the moat. A castle with no moat cannot survive. A business with no protection will be devoured by competition. The authors detail the types of moats Buffett looks for: brand power, cost advantages, network effects, customer loyalty, and sometimes sheer scale. They tell the story of See's Candies, a simple candy company with a devoted following whose pricing power and brand loyalty impressed Buffett more than its size. Buffett has always believed that a company with a strong moat can raise prices, maintain customers, and generate predictable profits for decades. As the narrative unfolds, the authors explore Buffett's approach to value and price, emphasizing his belief that price is what you pay and value is what you get. The book describes how Buffett scans financial statements with the precision of a surgeon, identifying companies whose intrinsic value is far higher than their market price. This concept is brought to life through stories such as his early investment in American Express after a scandal temporarily scared off investors. Buffett saw past the panic. He saw a company with a powerful brand, strong finances, and unwavering consumer trust. The moment the market overreacted, Buffett stepped in, confident that value would always triumph over volatility. The next secret centers on patience, a virtue Buffett treats as an investment strategy. The authors paint a vivid picture of Buffett sitting calmly through market crashes, recessions, and waves of fear. While others panicked, he waited. Buffett believes opportunities come rarely, and when they do, an investor must be ready, both financially and emotionally, to act decisively. The book describes how Buffett often sits on cash for long periods, refusing to invest until he finds something truly exceptional. To him, inactivity is not failure, it is preparation. Then the authors reveal a cornerstone of Buffett's philosophy: invest only within your circle of competence. Buffett never pretends to understand businesses he doesn't. He avoids complex industries, unpredictable technologies, and companies whose economics he cannot clearly explain. Instead, he focuses on simple, understandable businesses: insurance, beverages, retail, consumer goods. The authors share a moment when Buffett was asked why he didn't invest in certain booming sectors. His answer was simple: if I can't predict the business in 10 years, I won't buy it. This clarity, this refusal to chase, is what separates Buffett from the majority of investors. The story then moves into Buffett's emphasis on management quality. Numbers matter, but people matter more. Buffett looks for managers with integrity, discipline, and passion, individuals who treat shareholders' money with care. The authors discuss how Buffett admired the leaders of companies like Geico and Coca-Cola, not because they were flashy, but because they were predictable, honest, and focused. Buffett has always said he would rather have a great business with great management than a great business run by reckless leaders. In later chapters, the book highlights Buffett's belief in simplicity. While the world complicates investing with formulas, algorithms, and endless speculation, Buffett strips everything down to basic principles. Understand the business, buy it at a fair price, give it time, and let compounding do the rest. The authors contrast this with the behavior of typical investors, hopping from stock to stock, reacting emotionally, and abandoning logic the moment fear appears. Buffett's success comes from doing the opposite, removing emotion, avoiding noise, and thinking long-term. One of the most powerful themes the authors explore is emotional intelligence, which Buffett believes is the true foundation of investment success. The book describes how fear and greed drive most market behavior, yet Buffett remains almost immune to them. He controls his impulses, separates facts from feelings, and maintains calm even in extreme uncertainty. The authors emphasize that Buffett's temperament, more than his intellect, is what made him extraordinary. A great investor, they explain, is someone who can remain rational when the world is irrational. As the narrative draws to a close, the authors reflect on Buffett's view of wealth itself. To Buffett, investing is not gambling or guesswork. It is the patient ownership of wonderful businesses. Wealth grows not through speed, but through discipline. Not through excitement, but through endurance. Buffett often says that investing should feel boring, and that boredom is a sign of stability. The book ends with a simple yet profound message. Investing like Warren Buffett is not about copying his trades. It is about copying his thinking. His success is built on timeless principles that anyone can learn: clarity, patience, discipline, humility, rationality, and above all, a deep respect for the power of compounding. And with that, we reach the end of our exploration into the mind of Warren Buffett. His methods are not loud, not dramatic, and certainly not fast, but they are enduring.
every principle he follows reflects a deeper philosophy. Wealth is the result of understanding, not luck. Growth is the reward of patience, not pressure. And investing, at its core, is a quiet partnership between the mind and time. If this episode brought you clarity or inspiration, consider sharing it with someone who dreams of building real, lasting wealth. Sometimes the right idea, understood deeply, becomes the turning point of a lifetime. Until our next episode, stay thoughtful, stay patient, and invest with wisdom.